everybody. Just so you know, you can always get a hold of me on Twitter. If you're not already following me on Twitter, I share a bunch of stuff there. And if you follow me on Twitter and you're not subscribed to my YouTube, you might want to do that too. Um, yeah, I trade in the Trade and Perform room with my coach, Simon. If anybody wants to take a look at what we're doing, you can email him at trade, the letter N, the word perform, at gmail.com. And ask for a 5-day free pass. There was, for at least for last month, there was a pause that we had to take because he was getting a little bit overwhelmed and behind, and I think that might still be the case. So he may put you on a waiting list. But yeah, if you're really serious about learning, let him know that you found his name through me, and that I mentioned that we may be able to at least let you see what's going on. I don't know how many spots he's going to open up to actually join the trading room, but it does cost money. So and I do believe prices have gone up since the new year. But anyway, feel free to give him an email if you guys want to learn more about it. Today's actually my birthday, and I had a pretty good trading day for my birthday. Here, I'll show you quick. Not technically done yet, but let's see here. Where is my performance? Okay. So, all right. So you see, I got all my accounts showing, right? That I traded on today. So my first one was the bottom one. We started there. Traded 9 trades. I was 7 and 2, so 77.78%, pretty good. With a net P&L of $1,446 and change. Once I closed that last trade in there, I blew my daily goal out of the water, but did not have the trade copier on, of course. So I just went to my next. I've got 3 of them, so I just went to my next. What's it called? Evaluation, right? Because there was a big sale, so I grabbed a couple bigger accounts to try to add on, because you can trade more than one account with Apex. So if I can, I'm just gonna try to qualify as many as I can. But these are a little bit bigger than what I'm used to, so that's kind of fun. Trying to get them done in a month, so trading a little bit bigger than usual. I was actually down like 8 or 900 on this other one, just 50-50. I took one a little bit questionably too aggressive move I'll share, and then the rest of them were on process, and a few of them were winners, and I just hadn't been able to in the afternoon get enough winners to overcome the one unfortunate kind of aggressive trade. I actually got it back up to positive until just a minute ago. Where was it? This one. So I tried to buy here, and I wanted 10 points. And interestingly, the trigger happened at 91.50, and the MFE looks like it hit it because it went to like 02, but they filled me just a little bit higher at 03, and so it did not hit my target. Maybe it was 0350. I don't remember exactly where it was, but it did not hit my 10-point target. I took a full stop on that, which sucks. But that happens, right? Like you pick a number, and like that number is sometimes going to get hit and sometimes it's not, but that's okay. Like the way it's supposed to work is you just keep you got to look at things as a string of trades, right? It's not, no single day is any more important than any other day. So you don't really want to worry about like, oh, I took a stop, or unless you're taking stop after stop after stop because you're not trading it correctly, or the market's just like not trading in a way that works with your system, right? And assuming that that you're doing what you're supposed to be doing, and that everything's looking how you want it to, then it's just variance, right? And some days you're gonna have kick-ass trades like making like $1,400, and the other days you're gonna struggle to make $100, right? And that's just normal. So the key is to know what normal looks like. Now this is actually technically a trap back in if we close bullish. I could take this too, I think. I'll explain what I'm looking at in a minute. I just realized we probably have another opportunity here, unless I wasn't really prepared to take this. It's got to close bullish, first of all, otherwise it's nothing. What I'm trying to figure out is whether or not I'm interested in buying here. And there's reason to not, honestly. So let's skip it. Location is the problem here. It looks like it's not going to trigger on the algo anyway. But okay, good, it didn't. So it did not trap back in. So if this one would have been bullish, the algo would have identified that it's a high odds opportunity to make 10 points. But what the algo doesn't know is where we are on the chart structurally. So it's not looking at this. That's up to me to decide whether or not I'm in an area that I even want to look for an execution. What the algo is telling me is if this is an area that you know you want to be buying, let's say, like here is what you need to see to make. So here's another one. This is another trap, but again, the location's, it's got to close bullish. But so if it here, well, let's do this in live. Hopefully it'll trigger and I can show you. So once it closes, if it closes bullish, it might not. But that would tell me if you want to be long, go ahead and execute a trade, right? And if I just wait for those opportunities and filter them out with the algo, it's going to help me decide when to trade, not just where to trade. Looks like this one's might not trigger either. But there are certain conditions that I'm looking for. But this is one of the simpler ones to understand. You don't have to worry about any of all the colors and all that stuff for this concept. It's just look for one of these little apexes, little flags down here. They're up here too, right? And if you have a location that you like being long, again, I don't want to be long here, but let's say I did, right? Then if it can get under it and then come back into its range, the opportunity to get a 10 to 15 point move is good. But you have to see this little flag here, a little triangle. Do we call it an apex? Now on my coaches, on Simon's, it looks like this. It's these little triangles. But people get confused because there's also these red and white triangles. So I turned them sideways on mine, and moved them closer to the bottom of so they look like little flags on a flagpole. So they're sitting right on the wick rather than like above or below the bar. Because he would say like the triangle above the bar, and people would look here and be like, oh, this? And it's like, oh, no, I meant the red one. So I was just like, yeah, and my eyes would do that too. You know, like if someone's confused about it, then like you got to ask yourself like, oh, am I getting subconsciously thrown off by the fact that those two signals are basically the same, just the color's different? So I'm like, okay, I can adjust that. It's just after a while you have so many things you want to watch that like you have to either get rid of some that you're not using as much, or have it be distinguishable so that you don't have what you really want, right? You want a system that you don't have to think about. You just wait for it to do its thing, and then you respond, and that'll help you be able to stay a little more calm and patient. If it's just look for A, look for B, look for C, get in trade, right? You don't want to be staring at it, having to think like, oh, sorry about I forget they fly the jets at the Air Force Base like always, right, at this time. So my apologies. I swear it's not all day. It's literally just at lunchtime. But it's loud. I'll give it a second. Hold on. Thankfully, they're fast, so they don't stick around very long. So loud. All right, so what was I saying? I lost my train of thought. Something about the fact that You want enough information that you don't want to. Oh, I know what I was going to say. That you don't start with a system that looks like this, right? You start. How do I hide them? Analysis. Hide all settings. Okay, so you'd start like this, right? And you'd be like, okay, I want to understand how to use location to decide where to trade. That's how you start, right? So if you look at this, we'll just take a chunk of it because it's there's too much to evaluate. But the first thing you want to do is you want to think, where do I want to be making trades, right? Well, once you've figured that out, and I've got a color coding system and all that stuff, and it's not important that you know all that, but just all I want you to think about is wherever you see like the edge of these colors, right? Not in here, but the edge, right? Or wherever you see white lines is a higher time frame level, right? Those would be your primary locations. And then the dashed lines are the voodoo range levels, which aren't necessarily like perfect places to trade, but we can watch what the market does in response to that. So like for instance here, see how they're orbiting it? Up, down, up, down, up, down, and then they leave the area. So because of that, if they came back here and they bounce right off of it, then I might be wanting to start looking for a trade there. So then what I would do is I would, whatever setup I was looking at, right? I would look for my signals, and I wish I could hide them or unhide them individually, but I can't. But like I said, I've been doing this for almost 2 years now with all these. So there's a lot of different signals that have kind of been added. But what I was showing you before was you don't need them all. You just need to, you start with one of them and you master it, right? So the way that these little flags work is you wait. If you have one, right? I said we would be watching the voodoo range level, which is here, right? And if you have one that's nearby, what you'd want to see is for them to come under it, right? Get underneath it, like right here. And then right away, come right back at it and close a bullish bar above the low, right? Inside the range. And in my case, I would also want it to be above the voodoo range level because I want to see them bounce off of it, right? So if it closed here, I'd probably skip it because I'm going right into resistance, right? But if instead that flag was here, and then I looked and it got under it, and then it closed back over it, and it closed right here, now I have location and I have a setup, right? That's the key. So yes, there's a lot of colors and a lot of lines and a lot of things to look at, but what you got to understand is that I'm not looking at all of it, right? And most of the time I don't even have to look at it because I'm just waiting for price to do what it needs to do before any of the setups are even valid. And like I said, you can do that a lot of ways. You can do that with a candlestick chart and just pick locations based on whatever you want to do, or you can use a Renko chart. And so what I will often do is I'll go to a higher time frame, and I'll let's see, and I'll look at it. Oh, this one doesn't have the levels though. Chart hide. Okay, so I might go to a higher time frame. Right? So let's say I was trying to decide, do I want to be a buyer or a seller right now? Well, on the higher time frame Renko chart, it should be relatively clear where we don't want to be a participant, right? Where we wouldn't want to be a participant is, for instance, buying up here doesn't make a lot of sense, or selling in this big empty area doesn't make a lot of sense, right? If you knew you wanted to be short, let's say, what you want to see is going through these big zones, coming back to an important area and rejecting. Now I can look for the algo setup, right? That's where I want it to happen, is after this. I don't want to be shorting like here necessarily, right? Because I'm shorting right into this potential support. Now it didn't hold, it worked that time, but that's not going to be where your best setups are gonna happen. right? Same with on the long side. I want to see them go through it. I might not get this, right? Because I would think they already kind of crushed it, right? If I was just using location, I'd be like, yeah, I don't think that's going to hold. But then they close the candle above it, or the bar, I should say. Well, now when they retest it, now it's good to go, right? But would I have caught this very, very, very low? No. I needed to see that first. And then I'm like, oh, look, they're bouncing right off that support. Cool. Look at all this space I have to retrace, right? Well, this is where I want to be looking for a long, but I'm using leverage. So it needs to be specific. I need my stops on NQ to be no bigger than like 18 points. That would be heavy because I'm trying to use bigger size, right? And I don't want to risk that much on one trade. So like if in this case here, let's just see what would we need to, we can ask ourselves, what would we need to see to even consider being having a trade here? And you can go as far back as you need to look for the levels that you want, but mine are pretty much already on the chart. So so I could say if I was looking long, I really would I want to be a buyer here? No, not yet. That's for sure, right? What would I want to see happen? I'd want to see either this area hold and bounce, or get them under that area and bounce off of something like this, and then retake this and preferably retest it. And then I can get long, right? Or at least look for a long. Where would I be looking short? Would I be getting short right here? No. Not right now, right? Because then you're going right into resistance. So instead, what I'd like to see is something like break down into this big hole, right? Come back up and retest an important area like this, and then reject, right? So, and then preferably have some room. I mean, honestly, that's not a great one because there's not a whole lot of room here. So what I would really want to see is something like up here, right? A retrace this high that then comes back. These bars are quite a bit bigger than the bars I'm usually using for trading. But that's just the concept is I'm not necessarily trading breakdowns or breakouts. Very rarely am I looking for that. Usually what I want is to see that we've established inside some of these illiquid zones, which are marked for a reason, right? Because we tend to move through, once we get into them, we tend to move in them very easily. And then see if we can't get a retrace and then an algo signal, like a star or a diamond, right? So if I was looking for a short here, I wouldn't short all the way down in here. I obviously would not short the up wave, the up bar. But once I got this one and I was like, okay, it retested an area that I was interested in. I got the algo signal. If I've got a pattern here that I can take, I could short it, right? But it's got to be at a location that makes sense. So that's just kind of how the system works for anybody who's kind of new to this. And then the other thing to remember is that with Sierra Chart's system, that's what this is. It's on Sierra Charts. You're going to see these algos, these little signs and the colors come and go while the see like that how it disappeared. It's because the bar is still live. So it's giving me a warning that it may produce that star, but only if the conditions are exactly the same when it closes, which obviously it won't be, right? Because price will move. So you might get a hint, but you really don't know for sure until it's closed. So my if I was waiting for like that yellow star to appear here, I couldn't take the trade until the bar closed. So because of that, on the right here, we have a smaller time frame with none of the levels, and it's just for confirmation. And because these bars, since they're smaller, are gonna print more quickly, and those algo signals will never go away, right? Once it's printed, see, like that star will never go away. That star will always be there, right? Now that it's closed. But if we see a star on this bar before it's closed, this bar could change. Like that triangle, it doesn't have to stay there. If we close bearish, it won't be there, in fact, because it has to be a bullish bar for that triangle to be there. But note we're trying to bounce off this support, right? I'm not just going to buy it, personally, but that's notable. Yeah, there's not enough bullish momentum for me to be aggressive here. So yeah, just be aware of that. Like this here, watch here. This white star will disappear if we get to 10-9-13-50 before 10-9-25. Those numbers are where we have to get for the bar to close. So once we've traded there, you're gonna see it disappear unless we can trade to 10-9-25. There we go. See how it disappeared and it turned orange, right? This bar will always be orange now. So that's a very important aspect to think about. Don't get confused by the live bar, right? But you can see that this one prints pretty quick. So if you were trying to trade off of this, it would be pretty tricky. So instead, I trade here, and if I see something like, hey, like what I was just saying, if I said, hey, I think this is a good location, and I've got some kind of sign of aggression here on the 24 tick, what I did, should I get long? The very next thing I did is I looked over here at the 15 tick and I said, well, what has the 15 tick been doing? Do we have more sellers or more buyers? Well, in this case, the sellers are in control. And you can see that in a number of ways, but the obvious way is these cumulative volume waves, these Weiss waves here. The green is up and the gray is down. If the waves that are down are significantly bigger, like this, I've got the thing in the wrong place. If this is bigger than this one, then buyers are going to have to work a little bit before they can turn the market. And we don't want to be aggressive. Well, buying right off support is aggressive. A less aggressive move would be waiting for them to bounce off support, making a high, then pulling back, right? And then breaking that high, and then we could buy the dip, right? That would be a conservative way. So if we get this, that is a conservative place to buy. I hope that makes sense. Because we're not just following the first aggressive trader we're seeing at this level, which would be buying this. And instead, we're seeing what happens when they actually try to follow through. And if they continue to absorb down here, the likelihood that this is done increases. Okay? It's not just time. It needs to... It needs to basically trap sellers or exhaust, one or the other. And there are different ways to tell if sellers are trapped. An example of how sellers get trapped. See the stars down here? They're signs of aggression. They come from the footprint. I'm not going to explain exactly how to build them because what's the point of that, right? So if we can get above these yellow stars, if we can get the yellow line, which is where all the volume is, if we can get that above the high of these bars with the stars, even just probably this one, on a bullish bar, he is trapped. It doesn't mean we should get into the trade, but it means that dips that hold here can be bought, just like I was saying. So that's one of the reasons why that's a more conservative trade, is in this case, these guys could potentially get trapped down here, selling the low aggressively. So if we, here, look, let me just show you. Here. Okay, so this is the footprint, right? This is what the algo is looking at to make all those signals. It's reading this along with the information and it's comparing it to other information and kind of trying to say like, yes, we do have, or no, we don't have aggressive traders or traders giving up or traders getting trapped, etc. So see this down here, right? And that is producing the star. All of this bar here is producing the star based on information on there. I'm not going to tell you the way to do it, but I want you to see it, because if you know how to read a footprint, it's going to make sense, right? And then look what happens. They come down to it and they hold it, right? So Similarly, we get a star on the bottom, and then they hold it, and the result of that is a star on the top, right? So the algo is telling us not necessarily how to read the market, but it's telling us what it's seeing in the present moment. It's giving us all of the important information from the footprint and the DOM to help us make decisions if we're ready to execute a trade. All right. Okay, so we're watching to see if they can get a bullish close while the yellow line is above this high. That technically happened right here. Now that bar was pink, and the pink and purple bars are special. So you usually don't want to be entering when you've got when on a pink bar at the highs like this. See how this is like, if you view this as resistance, generally that's not a good time to be buying a pink bar. And the reason is because the pink bars indicate that price is primarily moving due to sellers pulling their orders off of the order book. So price is moving, but it's because either sellers are getting squeezed, or for some other reason, sellers are just giving up here for a moment, right? That can be bullish, but it can also be a sign if immediately after that pink bar you then retrace back and you are at resistance that you expect to hold, that pink bar may actually be the last of the buyers getting trapped. Like this could be the very last. So see how it came up at this resistance, right? From based on these zones, it came to the top of this this blue zone, and it's trying to reject. If they can take that back, if the sellers can take that back, it would be a sign of weakness on the part of the buyers. But the thing is that we've now trapped these guys, right? So what we would expect is for them to pull back, but not break the low. So that's what I want to see. I'm not just going to buy the pink bar because it potentially trapped these guys. I now need some sort of a setup to be produced at an area that I can risk, that I can manage risk appropriately, right? I'm not going to buy the breakout because the problem is that, like I said, I need that tight stop. And if I want to put a tight stop here and I buy right here, because remember, I don't know about the pink bar till it closes, right? So I would buy, sorry, it's this one. I would buy like here, let's say, right? Well, in this case, it would have survived. My stop would go like 18 points lower and it would survive. Well, what if I bought this pink bar? My stop would go 18 points lower and I'd get hit and then they go, right? So like 50% of the time or so, you'd lose money doing that. And that's not good enough, for, in my opinion, for trading this style. That's not that you need better than 50-50. If you're gonna risk any size, I would recommend doing something that works more than 50% of the time. I know that's not like people are usually pushing trend following techniques, which like only work maybe 40% of the time, 35% of the time. You can do it with futures if you want, but psychologically losing 60% of the time with leverage is really hard to do consistently without having like blow ups. Because I did trend following for a long time, and it's not impossible if you're doing it on a higher time frame, but on a tiny time frame with limited risk like that is really hard. You can do it with options, but with futures I'd have to trade micros basically to psychologically manage, because I can't psychologically manage losing in my average trades. Just to give you an idea, in my average trade, I'm losing if it's a loser, I'm losing like $700 to $1,200, right? That's too much for me to lose 60% of the time, because that would mean that sometimes I might lose 9 times in a row, let's say. So I'd be down like 9K, yet I'm not doing anything wrong. And psychologically, that's very difficult for me. On the other hand, when things go right, that kind of trading might net a 10 to 1 risk reward ratio sometimes, right? Not often, but it's got to at least get like a 2 to 1 or a 3 to 1, but it just doesn't win very often. Holding those runners when you know that you're going to lose 60% of the time is really tough when you've got a lot on the line on a regular basis, right? So if you're going to trend follow, what you need to do, oh, by the way, it does not look like we're going to get set up here. You would have had to take the aggressive trade, which isn't wrong. It's just not something I'm going to do into the close. We did have the location and we did have the sign of aggression, but it wasn't enough for me to get committed to the trade. But we had direction, right? We just didn't have on that time frame, we didn't have the setup. Now, did we get it on the smaller time frame? Let me just see. Yeah. See, we got it on the smaller time frame. Look, star down, star up, hold back, right? You could do purple bar, green bar, and then put your stop down here. Or once you confirmed with this one, you could put your stop. Your stop has to go under this, though. So you could have, if you were willing to trade the smaller time frame, you could have taken that trade. But I wasn't willing to do that. And I was not willing to take a trade up here, right? But the two, all of this is just saying that the two acceptable ways to trade, to get into this trade, to think about what to do, because remember, on a bigger time frame, like we looked at earlier, but in case someone is just joining, because I'm not going to be able to, I don't trade breakouts, so I'm not going to be able to do anything yet. So I might as well just start talking about how to think about markets and be systematic. If you look at this, we're making higher highs, and this is a higher low, right? You see that? Remember, I'm on a very small time frame. I only need 10 to 30 points to make this work, right? I just need to work a lot. So I could say, hey, I'm a trend follower, and I think it's bullish, and we're making higher highs, so I'm just going to buy this, and I'm going to put my stop down here, and I'm going to go, go work out or something, right? I'm not saying that's wrong. It's just that sometimes you're going to be wrong, and if you're looking for 2 to 1, right? You enter here, and your stop is here. Where do you need your target to be? You need your target. Oops, I guess, can I not? Okay, hold on. Can I do this? No, I don't know how to grab it and not, I can make it bigger and small. Oh, I've got the wrong tool. So 2 to 1 on this. That is, let's say you put your stop at 10,900 just to make the math easier, and your entry is 10,965, right? So you got a 65 risk, and you need a 65 reward, right? So 120, 11, oh yeah, like here is basically what you need to see for 1 to 1, right? That's 1 to 1, and now we need 2 to 1. So even high, yeah, something like that is what you need to see, right? When you did see it, it would be a big trade. Even on one contract at $20 a point, you'd be going from 60 to, it's like 120 points, right? So I mean, it would be over a 2K gain on per contract. That's cool. The problem is when you're wrong, you lose $2,000 for every contract, right? And if you're only right 30%, 35, 40% of the time, sometimes you're going to be down, let's say 5 times in a row, right? That's 10K. Like, some people can handle that. That's really, really difficult for me to handle. So instead, what my strategy that Simon taught me does is it says, yes, we know there's a good chance that these guys are going to get trapped down here, right? And if we get a sign of aggression, we also know there's a pretty good chance that we're going to go higher in the near future. So rather than trade it back here when it's breaking out, which was I think here or here, somewhere like that, right? Here, I'll find it. I guess our entry was over here, right? So there. So let's think about it this way. The breakout trader says, because it's unfair to give us more information that they had. So hold on. So the breakout trader sees this, right? And is like, oh, what did I do? Here, I'll do it on the higher time frame. There's just too much information. Because they're using a higher time frame. And they're saying, oh, sorry, that was loud. So again, if you're a trend follower, right, and that's all you do, what the kind of thing that you might do here is, whoops, I left a arrow in here for some reason. Okay, is you might say, hey, we made a high, and then a higher low, and then a higher high, right? So a very regular thing for a trend trader to do, and again, I'm not criticizing at all the strategy. I'm saying that, and in fact, it'll help you to know how this works because I use it when I trade options and when I swing trade. I just don't use it for futures. If you did use it for futures, what you'd have to say is, look, we've got a big trend, it's going higher. So I want to join the trend if it continues, right? That's kind of the idea of the trend follower. And so you had the first high here, right? And so you would have quote unquote confirmation that you were, after getting this higher low here, right? After you left that area, you're like, okay, we got a high and we got a higher low. If I get a higher high, I have confirmation that it's in an uptrend, right? So you would put your buy up here at 11:67.75, and you'd have to put your stop all the way down here under this higher high, under this higher low, 10.865, let's say. So let's even say that they didn't take the breakout. They like bought just a little bit lower just to make the numbers easier. So let's say they bought at 11.6225, and our stop was all the way down at 10.86225. If you're trading one contract of NQ, that is a devastating loss when you're wrong. Okay, because I mean, look at that. I mean, that's 200 points, right? That's impossible for most people to handle losing on a like 60% of the time, 65, even 40% of the, or sorry, even if you, 60% of the time. If you have a 40% win rate, that means you are losing 60% of the time. And so like you're not going to be able to handle losing 4K a contract, I don't think, 60% of the time. Now, you could say, okay, but some of the trend traders might not buy the breakout here, but if they would wait for the next breakout. And that's okay. I respect that. That 200 points is obviously too much. So, but they'd say, yeah, I think that having your stop there makes sense. So then they'd say, okay, but we need another breakout on like a smaller time frame, right? They would zoom in, wait for a pullback into a moving average, and buy on a smaller time frame. That's fine. Then where is that? Well, that happens right here, right? We had a pullback into what might be like a moving average or VWAP or whatever, something in the middle. And then they made a high, and then a lower high, and then they broke out here. So rather than entering here, now you're entering at 11.026, right? Well, that's still a huge stop if you have to put your stop down here, right? So whatever you're doing, if you're trend trading, you're probably, unless you're just buying every single time it pulls into a moving average, which good luck if you want to do that. You're probably not even getting a 35% win rate if you're doing that. But because a lot of times yeah, I won't even explain that, but most of the time you want to see some sort of continuation. Um, but if you want to try just buying at the level, right? Maybe you would buy this and then get, and then maybe like half here and half here and put your stop down here, right? Even that. Okay? If you have to put your stop underneath the higher time frame, higher low, and I said, okay, just buy on the 3 minute 10 EMA and the 5 minute 10 EMA on the pullback, and then just put your stop down here. If that was your strategy, right? Again, just total trend trading, you'd potentially get half your position here, and you'd get half your position here, and your stop goes down here. Where do you need to, again, assuming, I don't even think that works 40% of the time, right? But let's say it did. Let's say I was that we did the metrics and it worked 40% of the time. What would you have to do to make that profitable in futures? Well, your average, right? Your average would be somewhere. Your average cost would be somewhere in between, like 10,955 and 10,900. So let's say 10,9. I'll even give you like 10,920, right? Well, look what your stop would have to be. 10,860 to get under this. Again, that's just a higher low on a bigger time frame, which is usually how trend trading works. Your stop now is still 10,862, and your average is 10,920. Right? So we're still talking 60 points. And that's 20 points per contract. So $1,200 for every contract. So now look what happens. If it works 40% of the time, and I don't even know if it does, you would need a 2-to-1 at least, right? So I wish I could just grab the thing and move it, but I'm not totally sure how to do that. You'd think you could just, maybe here. Nope. Well, I can copy it and move it, and then do like this. So there's 1-to-1. Copy and move. And there's 2-to-1. You did not get profitable by the end of the day, and you're trading futures, so you probably need to close your position, right? That's when it's working. And then 60% of the time it just stops out, right? But even when it works, you risk not getting that expectation, because you're trading a very basically you're trading a market that was built for speculation and hedging. The hedging on futures is done by very large institutions on very high dollar amounts. The speculation is usually a lot more short term, right? So instead of thinking about this like a trend follower, you can use that information of the trend and say, okay, I think there might be a buy opportunity somewhere after this higher low. Right? I think that's totally great. Right? If you see this higher low here and you're like, I think there might be a buy opportunity in here. We got a higher high. All right, we got a move up. We got a higher low. I'd like to be bullish and see if I can make some money. So rather than waiting for another higher high, instead, I brought it to the exact same spot. This is the low, okay? Instead, if we've got the algo and our locations, what we can say is, when should I get long? Now that I know that it's bullish. So I'm going to say that it would be impossible most likely to buy this unless you're just buying the level. I realize it's at the line, but you'd have to buy every test of that or every bullish bar that presents on there to make that possible. So I'm not going to suggest that we would get the low, right? But then the very next candle goes higher on this, right? And then here you had a little stutter step, it went higher, okay, higher. I'm not buying breakouts. I'm not going to buy that pink bar, just like we talked about at the close, right? This is a very, very similar example, right? And everyone's like, oh my gosh, it's getting away from me. No, just relax, right? Let it do its thing. It's just a higher low. Don't be ultra aggressive, right? Yes, it's going higher. It's fine. Don't freaking chase, right? Just observe and wait and know, okay, let's see what happened. On the smaller time frame, the 15 tick for, I use the 15 tick for NQ. On ES, if you want to do it with like the 4 tick, that's fine. And then use maybe 6 or even 8 for your trading, depending on how much you want to risk. Because so the whatever chart you're trading on, that's gonna identify where your entry is, because it validates when you've got that bar closed, like we talked about earlier. So let's say like 77.75, if you just happen to buy this, your stop goes under this bar by 1 point, right? So you have to be comfortable with that much risk. It's a lot less than the trend followers, but we need a way to get in. We can't just buy because it's green, because otherwise we'd buy this one, right? We need more information than just that. But I'm just saying, no matter what you're trading, if this was your entry, or if this was the signal, or the trigger, I should say, to your trade, your entry would be here, and your stop automatically goes right under that, unless there's some unusual circumstances, right? So on the same token, looking at the smaller time frame, if you were using this to find your entry, stop is here, or entry's there, stop is here. You're entering earlier. See that? And your stop is smaller on the smaller time frame. That's an advantage. The disadvantage is that you're going to have the signal to noise ratio will be lower. You'll a lot more of the setups that worked, let's say 60% of the time on the 24 tick, will now all of a sudden work only 50% of the time on the 15 tick. So in my experience, trading only on the 15 tick requires a ton of confidence and psychological like stability, because the lower your win rate is, even though the stops are smaller, and your risk is smaller too, but the lower your win rate is, the more likely it is to get consecutive stops in a row, like maybe 3, 4, 5 stops in a row, even though you're running the system exactly like you're supposed to. It's just variance, the likelihood of that. Like the way to think about this is like a standard deviation. If you know anything about statistics, like one standard deviation lower than normal on the 24 tick might be like losing 4 stops in a row, right? 60% win rate, likelihood of losing 4 stops in a row. Let's say likely would be 1 standard deviation below the mean, right? So most of the time, you're going to have no more than 3. Every once in a while, you're going to get 4 more. If you go down to here, and now your win rate's lowered to 50%, all of a sudden now the standard deviation to the likelihood that you're going to have multiple stops, that number of stops might be like 6, right? And that's still normal. Only when you get above 6 stops in a row would you even have evidence that something might not be going right. You could be doing everything right and you'll just still take 6 stops in a row, right? That's really tough for a lot of people. Unless, just because, at least for me, I start to hesitate, I start to question, I start to ask myself, what am I doing wrong, right? That it's a very, very challenging thing to stay with the program, even if you know the numbers and you've had experience doing it, and I do, but it's still tough just to stay on process. So most people have a really hard time trading the smaller time frame, just like most people have a really hard time trend following with futures, right? It's the same exact thing. The problem is the same. Your win rate's decreasing, your system might work, but now you're taking repetitive losses, and the likelihood that you start making mistakes increases, and those mistakes cost you a ton in futures, right? So rather than trading on the 15 tick, what you can do is you can identify on the 15 tick signs that you might have some change going on in the market's what's the word, like state, right? So an example of a state, if you haven't watched like my Buddha Range video where I talk about it, would be like trending with momentum. So an example of that on the algo is if you have one of these flags put in and you close a bar above that flag, that would be a sign of potential trending with momentum. Because when you see this, what it's basically saying is that that's like a pivot point. And if it's bearish, you're not going to get you're not going to get up here. And if you do, it's going to immediately reject. So the other thing to think about is to be able to get a trend change or a trend to start from a sideways market, the first thing that has to happen is you need to make a higher high, right? To get so that's something to watch for. And you can ask yourself, like here, there is no question, I'd say, for most people looking at this, that you are in a downtrend, even if you know nothing about the colors and all that stuff. And clearly, downtrend, right? In this tiny little time frame, that is an impulse wave down. Even on this one, the 15 tick, impulse wave down. Lower, lower, right? Lower, lower, lower. Okay, what happens here? Go to these little flags. We've got to close above. See that? Okay, now watch where the next flag is. Right there. If we can now close above that flag, doesn't have to happen right away. So I'm going to put a line on it. If we can close above that flag without establishing volume down here, in other words, either price makes a higher low or it comes down here and traps back in to here, which I talked about before, where you go under it and then in one bar you come right back and close back into this range in one bar. Not all the way down here, just a little bit further. Sweep those stops and comes right back. Still good, right? But gets underneath it and establishes volume beneath it, definitely trend is continuing lower, right? So we don't buy yet, okay? We watch that level because we had a high and a pivot, or what we call an apex in the room. That apex was broken and closed above, and then we put in another apex right there. Here, I'll move that over. See, in this case the price itself, the label doesn't actually matter, so we can get rid of that. Okay, so again, high, broken with a close above, and then another one of those apexes on the top, right? It's not bullish yet, but if we can break above that and close above it, all of a sudden on this tiny little time frame, we are potentially making higher highs, right? So now we wait. What happens? Does price? Oops, I went too far. Does price establish volume below the low? It does not. There are no bearish bars down here underneath the low with the yellow line, which is where volume is, below the low. See that? There's nothing down here. All they did is they tested with price and they found buyers who shifted that volume back up, turning that bar green, right? So this would be a very aggressive entry for a long, extremely aggressive, but it would, it's not a sign of continuation. So if you were thinking that it's short and you wanted to know when to take profits, great opportunity right there, right? Okay, does it? Oh, well, here, we wouldn't know yet. So it goes up, Does it break this high? No. Is it bullish? It is not. Right? If you were looking for a short, that sign of aggression is your very first opportunity, but you would need this to be a location that you wanted to trade. Are we at a location that we wanted to trade? Yes, we are. Oops, that white line, as well as the, keep moving shit, as well as the edge of that little box that I just moved on accident. Why can't I? Here, let me get rid of some of this. No, not that one. The pink one. No, the pink one. Oh my God. Okay. There we go. Okay, so on this bigger time frame, are we at a location, because that's where all the lines are we at a location that we want to be short? Yes, like I mentioned before, the edges of these colored areas and the lines are generally good as long as you're not running into another line. Well, here, if you waited for that close, you're getting closer to that level, and you might not even have 1-to-1. But on this smaller time frame, your entry would be like 90.75, right? And that's way up here. That's plenty of room. That's 20 points before support, right? And then your stop would go above 10,900 a little bit, okay? Because we know it's bearish. So let's say we took that. Now remember, we're using the smaller time frame here, right? But we are in agreement with the higher time frame. The very easiest way to know that is if you look at the bottom. I've said that this is the second time I'm covering this, but if you look at the bottom and you see that all of the gray waves, this one is bigger than the one before it. This one is bigger than the ones before it. If they only have 2 bars, it doesn't count. Well, I won't say it doesn't count. It's not as significant. It's better if they have at least 3 bars, or if they at least get off the ground a little bit, right? So see how like these 2 bars were overtaken by 1 green bar? That does not mean that buyers are in control, because this was only 2 bars. You need at least 3. Okay, but if you want to be, if you then had, like, let's say a small sell wave here, and then a small buy wave, and then 2, and then a big buy wave, yeah, they've probably recovered, right? Like if you're seeing a pattern that starts to look like all of the like, if you, I don't know, I guess it's a little bit nuanced, I suppose, but if you just look at this overall in this little view, I think you can see that the sellers have dominance to the buyers. Hopefully you can see that. The gray ones are all kind of bigger than the small ones. Sometimes it's not quite so clear, but there it's pretty clear. If we go back a bit, that will change. Who's in charge here? Can you tell? You could probably even tell back here. See that? The buyers are in charge here. When it's not so clear, like, let's say here, where does that start? Where it's not so clear. Maybe right around here, right? It might not be super clear who's in charge. Well, now you need to look at a bigger time frame. Okay, because I was looking over here. Now we can look at a bigger time frame. And we can say, well, who's in charge here? Do we know? And if we're not sure, we're going to look at the current wave compared to the previous one, and then that one compared to the previous one. So if we're not sure, if it's not obvious already, you're going to say, well, I'm right here. We're going down, right? We have 1 up bar, but we're going down so far. This bar, this one here, is not yet bigger than this one. That's interesting. What about the one before it? Well, that's a down bar, down wave, and it was bigger than the one before. Are we in agreement with those two? Do we have agreement? No. One of them is saying bullish, and one of them is saying bearish. Right? The very first one says, we might not be bearish, and the second one is saying, oh wow, I think we are bearish. Well, in that case, what you're going to do is you're going to go back and you're going to think about where we are location wise. So you're going to ask, is this an area that I even want to be long or short? Like, because most likely you're in the middle of a range, and that's why it's flipping back and forth, or you're way at the top accumulating, and it's really obvious that you shouldn't be buying up there. You should only be looking for sells, or I'm sorry, just getting ready to distribute, consolidating is what I meant. Or you're at the lows, consolidating, accumulating, and you might not want to be shorting there, right? If it because okay, yeah, let's just leave it at that. I don't want to get too convoluted here. But if you back out a little bit, you can see that what's happening at this very location is that we're in the middle of a pretty big balance range, right? It makes sense that we don't have agreement with direction because there is no direction on this time frame. Just like here, where we're looking, I guess in the same place. Here, yeah, if you include this one, it's not super clear who's in charge, right? So the easy way to think about it is just if you can't tell, don't trade. That's the easy way to think about it. But the more systematic way to think about it is first pick where you want to trade and make sure that makes sense, and then you have a bias for which direction you're looking for. So for instance, let's say I'm here, and I for some reason based on a higher time frame or whatever, I already know I'm bearish, right? I'm not even going to look at the higher time frame. I'm just going to use this. I don't know if it's going to work, right? But let's just say I'm already bearish, based on some bigger picture idea that I know this is a location that I want to be short, right? But let's say I missed this orange bar up there, and I'm like, man, I wish I got short. If only I got a retrace, maybe I should be getting short. Well, to figure out whether or not you should or not, what the algo lets us do is says, wait, are the bars in your direction down? Are they bigger than the bar right behind them? And the answer is yes. Okay, cool. So far, short looks like it's a good idea on this time frame. Then you can zoom down in and you can say, well, what about down here on this tiny time frame? Is this a good time to short? Gray. Oh, there's no green, right? These are only 2 bars. That's a problem. If they can't even produce more than 2 bars of up before just pushing down further, 2 bars of up, pushing down further, what we should be seeing is building volume. Instead, we've got a divergent wave down. That's bad. Not a good time to short on this tiny time frame, right? Probably want to wait for some kind of a pullback. Well, then what happens right here? You break over this wave's high, meaning that you've got more volume on this up wave than you had on that little divergent wave, right? In other words, all of a sudden, the buyers are trying to fight back. Do you want to be shorting when the buyers are trying to fight back? Probably not. Probably not. So, and anyway, where is our location? It's way up here, right? Like, let's say 1100 at least. So let's see what happens when we get there. Not there yet. There it is, 1100. Okay, how are things looking now? Do we want to be bearish on this time frame? We need a 3-bar bear wave. The last one was here. This one doesn't count because it's only 2. 3-bar bear wave. Is it bigger than the last 3-bar green wave? No. That could be a problem. Is that 3-bar green wave bigger than the last 3-bar gray wave? Yes. Remember, bulls are trying to push, and they're having success. Do we want to be shorting? Probably not on this time frame. Okay, so let's wait. Does it mean it can't go down? No, but it means it's probably not going to go very far if it does. So now let's look at this one. We'll put a little line right here. So all of a sudden, right there, we get a dominant wave to the downside, right? It's bigger than the previous green wave, right? So if this is a location that you wanted to be short, this is your first opportunity to selling, and I realize that it's lower than this one, right? And we did not have that condition there, but your win rate's going to go up if you wait for this. Now, just because you have more volume on this wave than you did in the last consecutive, or what's it called, cumulatively, does not mean it's a short. You also need a price action confirmation on the footprint or the DOM, or whatever it is that gets you into a trade. For me, I need a sign of aggression or a pattern that shows that I have trapped traders. So for instance, star up followed by a sign of aggression like a diamond or a star is usually a pretty good sign that we might have trapped some sellers. Now the fact that it's purple kind of sucks here. It probably means it could get retraced. So I might not be aggressive getting in personally, but that's just this specific setup. The idea is still good. I just might not be able to put my stop right there. Let's see if that stop would survive. I kind of doubt it will, but I don't know. I actually don't know. It is bearish. Okay, looks like it's going to survive. If I saw this, I would go ahead and enter. It's yet another. You got triangle up on a pink bar, getting immediately beat by a star. And in fact, this one was also pretty good. You have this star getting immediately beat, and bears are in control. So any of these stars basically are fine for selling on this tiny little time frame, right? Your stop is maybe, let me see, what is that? You're getting in at like 87, 88, let's say, and your stop goes above this, 1100. So it's 12 points, right? Smaller than I'm used to, but the win rate will also be lower. If I wanted to wait, so that's the aggressive way to do it. If instead I want to keep that high win rate, and this is the way I do it, is I say, okay, 15 tick says it's short. Location is good. Now let's see if I can get triggered in to the 24 tick or get a retracement to make this a very cheap trade. In other words, if I'm going to be risky, I'm not going to risk a lot, right? So I am alerted to this when this bar closes. We'll say it's at 88. We'll give it one tick, right? One tick lower. I look over here. Let me get rid of the price so you can actually see that. Okay, so that's where you're alerted to it, right? So you wouldn't know yet here, but as this one is printing, you'd know about it. You're like, okay, I really want to be short, but I'm not going to get short yet, right? So let's just assume that this happened before before it triggered. I don't know if it did or, oh, I can see it right here. It did, right? So it did. So I would not have gotten an opportunity to get in there, or there. Oh, well, I guess I could technically take this retracement, but it's not much. That one right there is where I would have tried to sell. So in other words, let them try to fight it, right? Let them try to buy through my buy, and then as high as I can get it, go ahead and short it, and then put my stop right there at like 1104 or something. That's how I would like to do it. It doesn't always work out that way, because sometimes you don't get filled if you do that. But that's how I would have done it. And then remember, since you found it on the smaller time frame, this is very important. You need to have very, very conservative targets, which is why I'm trying to get risk small, right? Because these patterns are the exact same patterns as these, right? They're looking for the same exact conditions. And the Renko bar, the Renko thing is saying that when I say likelihood, like 50% achievement or whatever, like the win rate, I'm saying that you're going to get 2 bars more in that direction. So a win for this trade here is 1 bar, 2 bars. That's a win. Once I've gotten 2 bars of extension, it's a win for me, because my risk was only 1, right? So, but what people don't realize is that on this tiny little time frame, that might be only, what is that? 8 points, right? So it's about 1 to 1. It's not always 1 to 1, but it's about 1 to 1 to my stop. But it's got a pretty strong win rate, maybe 50% win rate on this. If I then want to hold runners, that's cool. But rather than taking profit at like 12 points, I'm going to need to take some at 8 points because that's going to be normal. And after that 8 point extension, this move here should be expected. It's going to come back to my entry, right? So if you're one of those traders that can't handle having your stop or hitting a target and then holding your position or runners back to your entry without trailing your stop, and I'm not talking about like 50 points. Obviously, if you've pushed the market away from your entry, you need to trail. But if you're waiting for it to see if the trend is going to shift or like what am I trying to say? If you see this and you think it's bearish, right? I don't think most of us would get in unless we thought this could break. But the trouble is if you're not going to take profits until that breaks, like proving you right or whatever, what's going to happen is the market's going to go like 2 bars lower, and before it even thinks about coming down here, it's probably going to come back to your entry at least once, if not twice. All right, so twice now it's come back to the entry. So what our method does is it says, sure, target down there with your runners, but make sure you pay yourself when the market makes just like a natural rotation away. And on these Renko charts, that natural rotation is 2 bars, because 2 bars to one direction is very similar to the space that 1 bar typically covers. That's just the way Renko works. Because you need to reverse, you not only need to get back all of this, but you need to, or back to the entry, but you need to do another bar, right? Like here. So see how this bar here, right? Well, that came after an extension bar. We need these two. Okay, so we go 1 down, right? We go a little further, and look how we came all the way back. These two are about the same size, right? But it did not produce a second bar, right? It closes bullish right here. It goes a little higher, and then it closes back here again. So, in other words, when you're going in the same direction, look how small this bar is compared to this bar, right? The bars that come consecutively in the same direction are going to be about half the size. That's what I'm trying to say. So when we say a win, it's not just one of those bars. It's 2 of those in the same direction, those little bars. It's 2 of those, or it's 1 of these, right? That's our risk and our reward, 1 to 1. So I want to make sure it's natural for the market to go 2 little bars and then come all the way back to here at least once before it decides if it wants to be down here or up here. We think there's a good chance it'll come down here, right? But sometimes we're going to be wrong. So if you want to make sure that you're getting paid, the right thing to do, especially if the market might go here and not make it to your target, that'd be frustrating, right? If you didn't get anything for that. So instead, rather than leaving all of the contracts on and potentially getting stopped out, and also rather than just taking everything at 8 points or taking one at 8 points and moving your stop to break even and getting stopped out, instead what you need to do is you need to leave your stop where it is, right? Take some profit at a natural rotation point, about 8 points on this or about 10 or 12 points on this higher time frame, so that when it comes back to break even, you're not going to be tempted to ditch your trade. Because all of this is, all of the, like, your trading plan, it shouldn't just be trade like a computer and do whatever is optimal. Unfortunately, that doesn't work for human beings very well. The truth is that we need to handle we need to mitigate the mistakes that our brain makes us make because it gets afraid or because it gets greedy, basically, right? Either one of those emotions, really any emotion, has the potential to throw us slightly when it comes to making decisions. So if you're someone who can just handle all sorts of pain, knowing that if you can continue to do the same thing, that you're going to win out in that over time. I mean, past performance doesn't equal future results, but if you based on past results, it would have worked out, right? If that doesn't bother you at all, well, then just wait until you hit your target, right? But for most of us, we want to get paid a little bit so that we don't have the temptation to move our stop when it comes right before it comes back to break even. So in this case, what I would say is I think it gets at least 8, and it might even take this low. Well, let's see what happens. Does that stop us out? Nope, because we left our stop above our entry bar, right? See that? Above the entry bar, okay? And there is our target getting hit. Cool, right? So you'd get paid either way, whether or not you took the aggressive entry up here on the 15 tick, or if you let that trigger alert you to saying, hey, there might be a short in here. Oh, sorry, it's right here. Let's look and see if we can get a good price for it. There we go. We got a good price for our order. And then we also got confirmation. So either you could enter here and put your stop here, or you can enter here and put your stop here. Either way, though, because you found the actual pattern of the trapped trader here getting trapped happens there, you need to put your stop above it, at least a point. On ES, maybe only a tick, but at least a point on NQ. You get a point is nothing on NQ. You know what I mean? I mean, a tick is nothing on NQ. You got to give it a little bit of room, and then joop, right? So then it's lower. Now, how would we know that things might turn around? Well, you just start the whole process over again, right? You just start it all over again. You got your target. If you had more than 2 contracts, you might want to hold a runner still. That's up to you, right? On a day like this, I probably wouldn't, honestly. But because we've just been kind of here, if you remember, it was like choppy. I mean, look at that, right? Like, that's not a trend. You don't need to. I mean, get paid for trading, but like, don't be holding for 100 points. Like, yes, you will miss a 100-point move. I mean, I did today, but I got paid. What was it? Like 10, and then 25, and I think 30 once, right? Like, I got plenty to make up for it. But yes, I released my order earlier before a big move came. But that's the price you take, the price you pay. Because here, again, our entry, I remember, was 80, right? Let me just, whoops. Okay, 80. And is that right? No, our entry's up here. Did not get hit. Oh, it actually went pretty far, right? So you could have gotten the MFE on that 23. That's pretty damn good. That's 100 points, right? So if you can trade 3 contracts, you probably won't get all the way to 100, but let's say, where would you know for sure that you're wrong? Let's ask that. That's a question I get all the time. Like, I see the entries, especially from members in the room. They're like, I see the entries. First of all, just get paid by having your targets. That's important. Make sure you're getting paid by having targets. But to know you're wrong, what you're really looking for is a sign of a trapped trader that traded in your direction, or B, a sign of exhaustion, suggesting that the trend probably needs some rest. That's usually a good time to release it too, because unless you want to sit there with a bunch of risk on when it's just kind of going back and forth, it's almost, in my opinion, it's almost better just to get out and wait for another entry. So let's go back to here. Like, we can cheat a little bit and know kind of where it happens, but it'll help me demonstrate it easier. So let's say we're watching here on the 15 tick, we're getting paid, right? We already took 2 runners and we're like, okay, I'm going to leave the other one on as long as I can. Unless I get signs that something's changing, right? So examples of things changing. These stars getting traded over would be an example of something changing, right? That shouldn't happen. Every time you see a star, And I don't just mean just a little bit. I actually mean like behind it. So like if you see like this star, let's say, for instance. So they put a star at the low. Oh, come here. Jeez. They put a... What the hell? What? Make it bigger. Okay. They put a star near the low. Right? If I was trading on this time frame and I wanted to avoid this time frame's kind of stops, like a 10-point stop, like if giving back 10 points would be a problem for me, right? You could, I don't know, just because you already made 50 and you don't want to only make 40, whatever. You would see something like this and be like, okay, if the yellow line gets above this on a bullish bar, I'm just going to release it. And usually that makes sense. No. Right there. Right? So you'd go ahead and exit because we got on a bullish bar, we pushed volume above this aggressive seller. Now, is that the bottom of the trend? Not necessarily, not on the higher time frame, right? But there's now a chance that since we've broken and closed above that, guess what? If we make a higher low, it's probably bullish, right? So unless you want to be risking getting squeezed, you probably just want to get out and wait for another entry. Now, in this case, what happens is they trap that buyer too. This buyer, same exact thing happens to him. Triggering you back into a short if you want. Right there. See that? So if I saw that, what do you think I'd do? I would not short immediately. I would go here and I'd say, if I can get a cheap opportunity to get short and put my stop right here, I will take it. Here it comes. Right there. That one. I'd short it, right? This, right here. See that? Does that? Can someone confirm that makes sense? You can put it in the chat. I don't want to keep going over the same thing, but I know it looks complicated, but it's actually not. It's just that there's lots of different possibilities. Cool. Oh, hey, Nathan. Awesome. Nice to have you here. Okay, cool. So yeah, that's like on that tiny little time frame. Again, that would tell me, well, you might have an opportunity to make 8 points rather than losing 10, right? If instead through this whole thing, if I was like, I don't want to take the stops that are required of using the signals on the 15 tick, and instead I only want to be signaled on the 24 tick because I want to have a 62 to 65% win rate, that's totally fine, right? You don't need to. Then all you need to do is watch the volume over here, but wait for the volume to be dominant, and then wait for the setup to happen here. So you're gonna miss some, right? But I'll show you that really quick. So okay, so we got buy wave. We need to beat it with a sell wave to be bearish on this time frame. That occurs right there. We switch over to here. We already know it's bearish, and we're looking for a setup. We probably need some kind of pullback. I would not personally buy that breakdown, even though there's a star. Not saying it's wrong, it's just not my style. It probably works, right? But we're not looking at the setups here, right? So we would not know about these trap traders, really, potentially trap traders. Nothing to do. There's no setups here. No algos, nothing to do. Okay. If we had one of these over here, it could be a head and shoulders entry, but we didn't. So still really nothing to do there. No setup. Only way that would work is if we had a reason to get in earlier. Where is our volume on the way up? We might have a setup here. Nope, it's at the highs. If that pink line, the volume point of control, was aligned with this orange bar, it would make sense to sell it. So nothing there. That one you could probably take. It's a little bit risky. but that guy just got trapped. See how the volume dropped lower? It's a purple bar. That's the only reason I say it's risky. Oh, I think we did this already. That one worked, right? Yeah. So that's where you get short. And remember, you should be getting 1, 2 bars before taking profits, leaving your stop where it belongs, and leaving your runners. Oh, and then it triggers again right here. The red with the yellow, once you've established lower like dominance here, once you've gotten the big down wave, these are great for continuation. It's got to be exactly like that though, or orange and like that, but it's got to have both. And then boom, so you get the long there. Now, where would you know how to exit the trade if you did not want to take a 2-bar loss, right? You'd have it. You'd have to do 2 things. You'd have to look for a bullish wave getting bigger than a bearish wave. So here, unfortunately, we only had a 2-bar wave here, so that doesn't count. So you'd need a bull wave getting above this to tell you even to look for a buy. Whoops. And that occurs. Does not occur there. Okay, now we have to get over this one. You can also do it on this time frame, but not usually. Right there. Okay, so right here. Oh wait, I was doing that wrong. It's the other way. Buy wave needs to be bigger than a sell wave. So this actually goes higher. Yeah, so that's not going to get taken out. I don't think. Okay, this one probably will. It's got 3 bars on it. It gets taken out right here. Don't just exit, but go here and look for an excuse to get out. Right? So at this point, what is that? I don't know why it's got. These all do not deserve labels. At this point, I'd ask myself, first of all, is this a place I want to get long? Well, the purple bar says, the purple line means it was a previous point of, volume area high or volume area low. Not necessarily a place I have to exit, but it might have been a target, right? And so if I hit my target, I just exit now that I've got this sign of some aggression here. And then the other thing I'd be looking for is the blue box appearing with a white, which is not here, a white diamond. But there's no white diamond here, so by itself, it's not usually enough. But if you want to be conservative, the blue by itself is something. It's just not great. You did have purple bar, green bar. Is it a high or low? Oh, wait. Is it a trap? If it's a trap, then you'd want to get out. Did that trap back in? No, wait. I don't think it did. It's like a double bottom, I think. It's really close. I think it's an exact double bottom. So I guess no. So we're still waiting for confirmation that we should get out of the trade. We did have that. There it is. Does that have? Oh, God, I can't see. It's got the blue. Yeah, that's not good enough. Man, pretty sure that goes, but I don't have a... If I had a star on this or if the whole thing was green, it'd be better. But didn't... It's just got a momentum shift. It's not any... There's no aggression there. It's weird. Oh, that's because it doesn't work. Okay. There we go. Dot followed by star, trapped. Okay, so now he is trapped. We want to be out of our short. Because the dots are divergence. So they're selling despite the fact that there's buyers accumulating here. And then buyers, they let them get the volume all the way under it. See that? The volume point of control is way at the low. And they blast them. They blast right through all those sellers. Pretty sure that goes higher. Yeah. Yeah. So if, I mean, obviously you'd at least want to trail your stop at that point, if not immediately exit. But if you're still in the trade, you can see here, that was a dominant wave. So once that happens, you really should be looking for longs, not shorts. So you'd start looking for longs here. So you might not be able to long this, but you should probably be getting out of your shorts. And now I'd be looking for longs if you were just trading the 24 tick. Notice here, you could have probably gotten long if you wanted. Purple bar star. Oh, wait, but you didn't have the confirmation till here, so no. So no. Let's see if you get another one. Purple bar, followed by a momentum shift and a big volume bar. That's a high or low. That's a high. And then purple bar, green bar. That's a volume anomaly too. Both of those would be entries for me to get long. There we go. And then you're good. And then your day's done. Yeah. So, I mean, it looks complicated because there's so many options on my charts because I've been building them over time. What most people do is they start here with what Simon has, and then if they're not using, let's say you just don't use the triangles yet. You're just like, I'm confused by the orange and the red triangles, so I want them to not show up because they're confusing me. Okay, just take them off the chart then, right? Like, not a problem. And now you're like, okay, let's say I don't know how to use the green boxes. Okay, you can take those off too. You know, and then you could just look for the trap trades where you get underneath and then you immediately come right back up as long as you've had a big bullish wave. And then you take it to go long and you get paid. And then once you get good at that, then you could be like, okay, wait, like maybe you see someone else talk about like a triangle related one and you're like, okay, I'll add the triangles back. And since you have looked at it for a while, then you can start seeing things like, one of the triangle trades, believe it or not, is right here. And that is if you get a pink bar with a triangle, and then that gets taken out, and then you get a bullish, aggressive bullish wave that's bigger than the previous bearish wave. In other words, you get bulls dominated, buyers are dominating on the smaller time frame. So again, that's only a 2 bar. That doesn't count. We need 3 down bars. And then we need a bigger one than that. Right there. So see how this is bigger than this one? And then on either time frame, we need another pink bar with the triangle. And so that one occurs right here. So you're notified about it. This one was quick. I did take this trade. You're notified about it at 87.25 to watch for that pink bar triangle. 87. Down here, let's say, right? This is when you know about it to watch for it. And now I'm thinking, okay, I just need a pink bar with a triangle and I can get long. And it happens right there. And then it goes. And it goes some more. When you get another, this is another signal. Pink bar. So this pink, only once you've gotten dominance, you must have that dominance and you really do want location. Then pink bar with the triangle. They try to come back. They can't retrace it. And it comes back in with a sign of aggression. Boom. Buy. Yeah. Now, like I said, do you want to do that up here? I wouldn't. Right? I see that that's another pink bar with a triangle. But like, look at what we just did. And like, if you know NQ and what NQ usually does, like, I realize that might work this time, but I'm usually not going to do it. It's a big difference doing it here. Here, let me get rid of some of these lines. Doing it here, like, you're basically preparing for a breakout, right? But it's not the top of the day. You know what I mean? You've got a target maybe up here with the liquidity that was produced up there. So like your potential is good. Right? Whereas this one, your potential is getting smaller. You're almost to the high. You know? So like, do you want it? Ask yourself, would I take a momentum trade here? If this was, like, let's say you're looking at a daily chart, right? And you're swing trading with a trend following system. Like, would I want to be a buyer there? Down at the bottom here? Like, I'm okay missing that one, personally. I'm okay missing that one. I'm not saying it doesn't work. In fact, I think it does. Yeah. Yeah. So, I mean, you get it. I'm not saying it doesn't work. This one did too. So, 1, 2, See it? I didn't show both of them. You need two. One, pink triangle, right, is retraced, and you need more buyers than the sell wave, which happens here, right? And you might get another one too on the smaller time frame, right there. So you know about it at 9:54 that you've got a 3-wave down wave dominated by new buyers. This one also has a sign of aggression, and it's a trap back in. Like, there's literally like 100 ways to get along, you guys. Like, it's just which ones do you want to learn, you know? And then there's the confirmation in the higher time frame. I did not take that trade. The way I looked at it, I was looking at the big picture, and I did not have the vision, because I was like really, like, I'm gonna buy it all the way up here, but it worked. And so it's sometimes it's just a matter of being a little more aggressive. But at the top, you can see we have pink bars, but there's no triangle on it, and triangles, but there's no pink bars on it. And so what that basically means is that sellers are fighting in that bar, which you'd think is a good thing, but that's only a good thing at the lows, right? We talked about that earlier. If you can get sellers, where was that seller that got stuck? Here. If you can get sellers stuck at the low like this, see the triangle and the star getting trapped by pink bars, that's good. That's bullish. Okay, but now I don't necessarily just buy the pink bar. I think I've said this like 3 times. I don't necessarily just buy the breakout, but once I've seen that, now I'm looking for signs of aggression. Oh, that one's failed. Oh, I see. Drop back in. There's your entry. That's got to work. Yeah. So then you're going to get 12 points. More likely than you're going to lose them. This one, there's no... Really, you want the purple bar here. This would be a little bit aggressive, but this is the drop back. This is the higher odds entry to get your 10 points. This same exact concept happens on the other side. So same exact concept. I'll just go further back. Let's find a buyer that gets dropped. Right there. Bearish. Right? And if you weren't sure, look at this. Right? Sellers have control. They're dominating. I guess I'm too far forward. Maybe not. Oh yeah, right there. Sellers are in. Oh wait, no, this does not have 3 bars. Not enough. So you wouldn't know yet. There. Now you know. Right there. Now you know. So you would know here. Right? Beat him. That's the guy you're trying to trap. You don't necessarily have to sell it right away. But now if we can get volume, that little, on this one, on this algo, on Simon's, it's just this little dash. If we can get that down here, it's over. Right there. Oh, that was close. I don't think they made it. It's got to get under the low. Not at it. Under it. Nope. Not yet. Wait. Wait. Right there. Oh, sorry. That's your entry. Why can't I grab that? Come on. That's your entry. Right there. Short. Dropped. Right? And then this divergent bar, what does that mean? It means there's lots of buyers in there. Right? On mine, it's a blue dot and a black dot, and on Simon's, it's a yellow dot and a white dot. It's just, I just like my colors the way they are, so I change it. But there are a lot of sellers in there, right? But closed bullish. Those sellers can get trapped. How do I know they're trapped? The same thing. Okay, so come back. Are buyers in control? Should I be looking for a buy? No. Sellers are in control, right? Wait. There we go. Oh, maybe not. Hold on. It's so big I can't even see it. Ah. That's a pretty big sell wave. Right there. See that? Okay. So at this point, I know to look. And if I want to be conservative, wait for the setup on here. Do I get the low down here? No, I do not. I was too late to find out about it. Is that okay? Yeah, because I'll probably get a pullback. I don't know if I will. You could be really, really, really aggressive and trade this, but there's no algo on it, so there's no real aggression. They're just pushing price up there, but it's like, eek. I personally wouldn't trade that, but if they come back in here and they set up an actual setup that I know, I will take it. Oh, if that had a star on it or anything, I bet you anything it has one on mine, but on Simon's it did not trigger. That's too bad. That probably works. Yeah. So here, let me find. Is that the same exact spot? 9 o'clock? Let me check. I'll show you why I add things. Yeah. It's the same thing. Mine has signals that his doesn't, right? And most of those signals are his. But we don't want to put, if everybody had to look at all these all at once, like you guys would get dizzy, right? So we simplify it with the ones that like most people use, and then all of us pick and choose as we like remove things. Like I'll keep it, you know, like he'll like there's a point in there where he said the speed bars kind of stopped working, so I manipulated them a little bit to make them work, and he just removed them from the chart. Well, I like the way I did it, but I'm not going to make everyone else look at it, you know? So I end up getting that extra trade, whereas everyone else in the room just has to wait until it sets up properly. And in that case, it did not. We'll find one that does, though. No trap sellers. Okay, so let's see. There's a seller, right? There's a seller. What the algo's on it? Can we trap them? No. Okay. There we go. Did we have a dominant wave on the smaller time frame? Yes. When did we know about it? Right. Give or take there, let's say. Right there. Okay. Could we have gotten this low? No. Are we ready for a long now? Yeah. That's your super, super aggressive long that I would never take. But it's confirmation that long is the right direction. Sometimes it just goes. Sometimes you get an entry like that. The only way this would work is if the volume lined up with that from the move up. And it does! See how the volume point of control of that little wave is within the range of the star? Good to go. Oh, it did fail. That's right. I forgot. They don't always work, you guys. They don't always work. And then there's the trap back in that worked. Yeah. And still no dominance on the downside. Interesting. Another trap back in. So that should work too. This one should still work. There's no dominant wave, right? No bears dominating. Yeah. So you take a stop, right? Let's think about how this would actually happen. I would lose whatever that was. It was 10,902, 1082, let's say, right? 20, let's say like probably 18 points. Here, I'm in at 95.50, let's say. I'm out of one of my contracts at 05.50. And then the other one over this, like anyway, this is fine. I'd probably take another 3 to 5 points. Yeah, that's plenty. And then this one. So what is that? That's average. Let's just say 10. Like we'll just say I took all at 10 rather than giving me an extra 3. And then, so I'm still down a little bit in that scenario, right? And this one is in at 89.50, out at like 75, let's say. So a little bit better, right? Only 16. I still need 10 points, 89. So right there, I'm covered for my first one. I'm holding my runner to try to get there. And there it is. Out, right? So now I made 10 with 2, right? And then the other one I made an additional, what was it again? 09? Another 10, let's say. So rather than being down, what was I still down? I forget. 8? No, I'm up 2. Right? If you don't have a 2-to-1 risk reward ratio like a trend trader, yes, it's going to take you more trades to make up for the stops. But if you have a 60% win rate, that's okay. That's not a problem really. You just have to keep doing it, and so you have to make sure that you tool your system to help mitigate whatever it is that's keeping you from doing whatever you're supposed to be doing. And that is what's hard about this. It's not learning what to do. That's not that hard, right? It all makes sense, and everyone can kind of do it in hindsight with just a little practice. What's hard is when you take the stop to stay focused on what you're supposed to do in your system and just keep doing it and doing it and doing it and doing it. That's what's hard. But I mean, like I shared before, it does work. These are real numbers, is it perfect? No, you're gonna take some losses. But what I do is once I do well on one account, I just move to the next one, so then I don't have that psychological barrier of I don't want to give back money. It's well, just put that account away and open another one. Any questions, you guys? Anything I can help you better understand? You want me to look at a certain spot on the day? Anyone want to see something in particular? Let me know. Just type in the chat. We can look at ES if you want. I don't care. Whatever you guys want to see. The short up here was awesome, by the way. I show a lot of longs, maybe I'll show the short. So, first of all, in the meantime, if you guys want to see something, let me know. But so, big picture, without all the algos, right? Just structurally and stuff, like the lines. If you look up here, we had this consolidation, right? And I had some levels down here. The white levels are from the higher time frames, and they're really important. And then the shaded areas here are high volume nodes, but which are also pretty important. But look how repeatedly. Oh, and then the blue is a prominent point of control previously, like a previous daily point of control from regular trading hours. And so look how it acted as resistance there, and then we get over it, right? And then we are approaching this longer, higher time frame level from a while ago, right? So if you and we scooped up all of the liquidity that came from when they tested and rejected off of that prominent point of control. That's a fine place to trade. There's no problem with that as long as it's a few days old. That's cool. But what I like is looking for what happens after the sweep, especially if the sweep is really impulsive, because you can retrace at least half of that. So now look at what it looked like on the algo. So that's the area up there, right? And then here, I'll show it to you without what I added from the trade. But if you go back and measure, you can actually do this without the algo at all. So the start of this, it helps a little bit. The algo shows me that the start of this wave is here on this white with the blue. That's an entry, by the way, as long as it's bullish. So what we're going to do is we're going to measure the volume profile of just that wave. And we're going to see that the majority of volume was way at the highs. Okay, that alone is not enough reason to sell, but it is noteworthy because what it means is that if we can develop volume below that, right? Remember, we don't know about that till here, right? So you can be really aggressive and sell this. That's pretty aggressive. But instead, if you wait until you get volume below it, so it's this purple line right here, we need to get the yellow line to get under it, right? So that, whether or not this did it or not, I don't know, but these definitely did, right? I don't get short there because I want really tight. This is the signal that is probably bearish, but I want a really tight risk reward, and I want to put my stop up here, right? So instead, what I'm going to do is I'm going to wait for it to retrace and see if sellers can show me some aggression. And these are the same exact signals that we just talked about, just in reverse. I don't remember which one it is. There, right there. pink bar followed by star, or pink bar followed by orange bar. Either one of those is good. And that's a sign of a reversal, potentially, as long as the location's correct and stuff. So these guys up here just got trapped. So that's your entry. It works even better if the point of control interacts with that star, the range. See how it's interacting there? So they literally tested into that like high volume area and rejected with aggression. That's all it is. I mean, you don't need the algo for that. But it's a great trade. So then, now if that one fails, and that's fine, you can take it again, especially to the short side. If it triggers again, which happens right here. So it's close whether or not, if you put your stop right here, you might have gotten taken out, right? But if you were, what I did is I took it with smaller size and had my stop up here. That's how shorts are just hard. I'll be honest. They like to like mess with them. So I got in here. I don't have a way to filter that one out really, but I put my stop up above. I figured that they might come up and test up here. So I put my stop higher, and to do that, I took it with smaller size. But if you want, you can take full size here with your stop here. Then if you get stopped out right there and then they re-trigger, you just get back in. But you might take another stop if you're wrong, right? So that's where that gets tricky. Is like, how much do you want to risk on this trade? I have a way of risking less by just trading smaller size and with a deeper stop. But if you want to potentially risk more because you know that the chances of a big roll down are high, which they were, then yeah, you're right. Because think about it. If you do it that other way, your stop is how much? Let's say 59 to like 45. So 16 points you lost, but you're in at like 45, and it went to like 75. So that's 70 points. Is that right? Yeah. 70 points. So you lost 16, but you made 70. As long as you were willing to take it twice. But I think you could probably see how, if you try to do this on the smaller time frame, remember it's normal on the smaller time frame to take not just one stop in a row, but like multiple. But those stops are small. So it'd be like, you might get triggered in here, and then it sneaks up and takes you out. This one didn't, but let's say it did. It would be normal. And then you take another one. Now, you would have gotten your risk off here, right? You would have gotten 8 points. You'd only have your runners get taken out. If, again, I'm saying if this had a longer wick, which happens a lot. So you get taken out. You'd have to get back in here because that triggered again. This one did stop you out, but it paid you your 10. No, it didn't. It missed it by like 2 points. It missed your target. So you get a full stop here. So you'd be down one runner and one full stop, but then it triggers you in again. Bingo, right? So the difference is that those stops, rather than being 16 points, you're in at 48, you're stopped at 58. They're 10 points. So, and you would be able to make 8 on one contract and then lose 10 on one contract. So you'd be down like $40 if this one stopped. It didn't, but let's say it did. And then if you got back in, this stop was on full size. So let's say 48 again to like, we could, yeah, 57. It's like 9 points, but on 2, right? So you were down 2 points. Now you're down 20, right? Total. So you're down 400 now. And you have to be able to take that again. Otherwise, you're going to get tilted. And that's hard for a lot of people to like make 40, lose 50, lose 400, and not like get shaken up being like, am I doing this right? Right. And that's for every contract, right? So like if you're trading three contracts, you're down $1,600 after taking 2 stops in a row. And the right decision is just keep doing what you're doing. And that's tough. That's tough. But on the higher time frame, you're usually not going to get more than one of those. Whereas on the smaller one, you can literally get multiples, which is really tough. Really tough. So yeah, no questions, you guys. No one has anything else they want to see. I will shut it down. This went for a good 2 hours. Hopefully, I wasn't rambling too much, but always learning more. I really like using the smaller time frame for confirmation. It's helped me a lot. I've got some other new tricks up my sleeve too, but I think a lot of my success in the last month or so has just been sticking with the plan. Like not, I'm really trying this year to focus on doing what I know works and just leaving the rest. And then if I have new ideas, which always happen, I'm working on it away from the market. So rather than like testing it live when I don't have like back tests on it, I'm first developing, saying like, hey, look, I've seen that a lot. Let's see if that works. And I'll like do a stream about it or whatever after the market. And then the next day I'll watch it. And then the next day I'll watch it again, but I'm not taking the trades. And only once I see that it's consistently working am I actually adding it to my repertoire. But that's how we figured out this 15 tick thing, is that like we started playing with it. And it's just like, you know what? Right before we get triggers that work, we tend to get dominant volume there. Let's just see what happens if we filter all the ones out. And it's like all of a sudden the stop rate just like plummeted. It's just like, oh my god, we're missing all these great like these stops that were usually really frustrating, and it's not filtering out most of the good trades. Sometimes does it filter out good trades? Yeah, it does. But yeah, I agree with you, Nathan. It's you can tell that it was built by somebody with the intention of like teaching how to do it, because everything's broken down into like it's almost like a language, right? I guess is maybe the easiest way to say it. Like once you learn the basics of a language, you can survive just fine. You might not be able to have a intellectual conversation, but you can find the bathroom and you can get fed and all that stuff, right? And that's kind of how this is built, is like you start by learning like, hello, my name is Ben, it's my birthday today, right? Like that might be something you learn to say, or where is the bathroom, or like very simple language, and then only later on do you add on like more complex vocabulary and stuff. That's kind of, I don't know if that's a great analogy, but that's kind of what is going on here, is like learning the basics is what takes the longest, is really maximize like really getting it so that you don't have to think through it every single time, or like have like a list of all of the possible triggers and be like, wait, is that on my list? Like if you're still doing that mentally, you're probably just not ready to trade it real time or real money, But once it gets to the point where you can just see it and you just know, like when you see a low with a purple bar followed by a star, especially if stars in the bottom, you just immediately think like, oh, that should be bullish, right? Like adding the next steps is not that hard, because that never changes. It just gets more complex. It's like, well, that works really well, but why doesn't it work here? Right? And it's not that it's wrong, it's that it only works in situations where you're at support exhausting sellers, right? And if you know that and you look up here, you're like, well, are sellers exhausted up here? No, not really. They're not doing anything, right? So yeah, sellers are giving up, but I'm sorry, buyers are giving up here, and then there are aggressive buyers. It's the same exact information, but it's way less meaningful than buyers giving up at the lows, capitulating, aggressive sellers coming in, and then immediately buyers coming back with aggression. That's only meaningful at support, right? This is not support. What they're trying to say is this is new support. It's not. What happens? They try to push, they roll over. Buyers give up. Buyers get trapped. Right there. So what happens if it comes up and it gives me pink bar star? It's going to go lower. I'll take a short. right? Like you could just trade that if you want. You could just say, I need location. I need that, what we call a 2-bar combo, where you have a pink bar followed by an algo of aggression, and you just trade that all day long. As long as you know how to find support and resistance, which, like I said, is not that hard. And we hope that's that. Yeah, that's it. But I just want to make clear that my charts are a lot more busy because I'm capable of taking a lot of different kinds of trades. I try not to take them all, right? But I've got to the point where I can just kind of say, okay, this should be bearish. I just need the setup. And I've maybe got like 6 or 7 different ways it could set up, right? And as long as I see one of those things, I'm good. But notice here, purple bar followed by star doesn't go anywhere. Why not? Because it's not at support, right? They're not. There's no. These are this look. This is buyers giving up, but it's not because of sellers being exhausted. That's not what's happening there. Like, look at that. Sellers are trapped, right? And buyers gave up. Like, that's not good. You shouldn't have buyers giving up and sellers are trapped. That doesn't make sense. They try to save it. Takes a lot of aggression just to push it back a little bit. Now sellers start giving up a little bit, and they come back into aggressive moves. Once this guy gets trapped, which happens right here, you know more or less that it's not just going to run right through them. Well, I shouldn't say that. If it returns to that area, and they aggressively defend it, now I'm relatively confident that it's not going to go any lower, any higher. That it won't go any higher. That's what I'm trying to say. Okay. Good enough. I'm going to take off all the lines from today. Cool. So yeah, hopefully this was helpful. I'm going to shut it down. I got some other things to do. I will see you guys all next time. Thanks for tuning in.